In this video we will discuss how to trade around unexpected market news. Because unexpected market news happens all the time, and you must have a plan for trading around them. By the way, if you are new on this channel, please consider subscribing, so that you don't miss future videos. Remember to hit the like button just to motivate us to continue making these videos. By the way, if you are interested in making money online via trading etc., visit the links in the description box below, and you can download various trading tools, forex robots and books for free. People often ask me about the broker I use. Check them out in the description below. I have tried many other forex brokers, but none have come close to my broker in terms of customer service, fast, seamless deposits and withdrawals, reliability of their platform, deposit bonuses and trading education. They have various accounts to suit every taste, and you can start trading for as low as $5. Now you know why I have been with them since 2016. Sign up today with the link below and see for yourself what I am talking about. Let's get into today's video. When the Fed or the government makes an announcement, the markets are likely to react. Whenever there is unexpected news, many new intraday traders can find themselves in the red. Especially after volatility takes over the markets because of unexpected news. On April 22, 2021, that's exactly what happened. We found ourselves in the midst of unexpected news with President Joe Biden's tax proposal. The president planned to raise taxes on the wealthy. And when you hear news like that, traders need to be prepared for the moves that could affect their positions. How to trade the news. Now more than ever in this market environment, traders are waiting with bated breath on anything that could change the course of this market. We have seen Fed members talk about interest rate hikes and inflation, we have seen countries going to war, and all of this news has driven market prices both higher and lower, affecting not only individual sectors, but also the entire market itself. As a trader, our job is to keep emotion out of our trades and only look at the technicals. This can feel like an impossible task when news can come out of nowhere to whipsaw the price around, but with volatility comes the opportunity for some really great trades. And volatility loves to occur around unexpected news. Traders can find themselves lost at sea in this situation, but if you have that understanding you can soon find yourselves to be a true master of the oceans. What happened? Almost immediately after Biden released his proposal to tax the wealthy at a higher rate, we had a strong sell-off. As many big hedge funds and industrial traders find themselves in this wealthier category, we expected the market not to react too kindly to the news. For those watching the intraday charts, there was a strong sell-off, but the sell-off fell right into support levels. Be cautious. The most important thing to note around volatile news like this is to always stay cautious when you are trading. Be extra wary not to get caught in the sell-off. Sometimes these announcements can cause knee-jerk reactions in the market down to support levels, where the price holds and then bounces. We have also seen this in the case where positive news comes out, the price immediately spikes, but only right into resistance levels. While this news, in particular, may have less of a possibility to bounce, it is possible the market could chop around support. If the chop has a wide enough range, this can make room for some great intraday trades. Don't get emotional. If you hold longer-term trades and it isn't an intraday trade, don't trade solely off the news and get caught up in what the shorter-term move will be. It could end up making a great intraday trade, but don't get emotional if you have time on the trade, or if it isn't expiring. Oftentimes, the move reverses within the next few market days. It may be easy to get caught up in the news and let that emotion drive you into or out of a trade, but this can be a very dangerous game in your trading. Psychology is one of the most important factors of trading, and it's important to remember this when trading around unprecedented news. FOMO, either on closing out of a trade that appears to be dying or forcing yourself to open trade so you don't miss out on all the profits, can be a dangerous way to trade. With these types of moves, it is easy to go into the dark side of trading and let your emotions guide you. Make sure if you are trading off the volatility surrounding the news, you do so with the technicals still in mind and make an objective decision based on what you are seeing on the charts. Risk what you are willing to lose. It is unexpected news like this that reminds me why I am so mindful of capital risk on every trade I take. Especially around Fed and unplanned news, the intraday trades you make should be treated like earnings announcements, meaning it's 100% a lotto trade. By risking only what you are comfortable losing, you eliminate the emotional side and are able to play the moves around the news more strategically. I am glad we were able to close out several of our trades for profits or break even prior to the news release, so we were able to recoup some of our capital and protect some winning trades. Be mindful of your technicals. Unless the technicals are also in line with the sentiment, I would prefer to trade just solely off the technicals. Oftentimes I have found the technicals are showing you what is about to happen, and the news is the catalyst for the move. If you are intraday trading off of the news, still be mindful of your technicals. Make sure that overall, if the technicals are not holding up on a smaller time frame, then the news is a bit stronger, and you may have to look at a larger time frame for a bigger picture view on the technicals. If after the volatile move where the price broke 10-minute support levels, you find on the 60 minutes chart the price is at a simple moving average, then sometimes these emotional moves still end up pausing at your technicals. Keep true to your trade discipline. Once again, match your position with the technicals and make sure you keep risk small, and only risk what you are 100% willing to lose. When the news drops like this, volatility will spike, and you will have to pay more for those options. As soon as the market digests the news, typically that volatility, and in turn the premium on options, will drop back off, especially if it is near-term expiration. Always be cautious with how that works. All in all, don't get knee-jerked by the markets. Be extra cautious around unprecedented news if you are intraday trading. If you have long-term positions and are able to, try to hold on to another day, so you avoid getting knee-jerked by the move and stop yourself from trading emotionally rather than what the technicals are telling you. As always, my fellow traders, may the trade be with you. If you learned something new in today's video, please remember to click the like button. Leave a comment with your thoughts in the comment section below. Again, hit the subscribe button so that you do not miss future videos. We will see you in the next video.